Let's take a look at some charts, figures, and graphs on 1inch for Brave New Coin. 1inch is a DEX aggregator that dropped their token almost a year ago now exactly. They had the benefit of a bullish market immediately in January. Ever since February, March, it's certainly been less freely bullish across the board in DeFi. But just as any good DEX aggregator should have and provide information regarding transaction costs for the competition, that's certainly the case here. They have limit orders, market orders, all the tokens you'd ever want and need, all right here. They are on ETH, BSC, Polygon, Optimism, and Arbitrum. So from an aggregation perspective, this is what you want to see. Just multi-chain. I don't care as a trader which chain it goes through. I want the cheapest, fastest, strongest option available. And for the most part, I don't care about the token either. I think that's the general sentiment for most people when they're using an aggregator. They care about what they're trading. They don't care about a token of the exchange that they're trading. That might just be my opinion, but that's how I feel anyway. So they have governance, they have pools. None of this stuff is going to move the needle. At least it certainly won't anymore. And you can go through these APYs, but ultimately there just isn't the TVL on 1inch that was previously there, mainly because they've gotten rid of their farming programs. You can see when these ended, how that's reacted with price. It's hard to say because TVL does not correlate with price. Token release doesn't necessarily correlate with price. So you might think, yes, we're incentivizing all these people to stake on 1inch, therefore inflation is higher than normal. Maybe that's bearish for price, but the reality is the entire market was ranging or neutral in that period and continues to be ranging and bearish. And we can look at the metrics. None of them look rosy or bullish. This is volume. It's just flatter down, liquidity flatter down, TVL flatter down. So none of that is like a rising metric as far as the token price is concerned. Now, if this looked different, would it matter? I don't think it would, because we can look at Uni, not an aggregator, but Uni has the most volume of any DEX. It has the highest TVL, I think, of any DEX. That has not seemed to matter whatsoever for price. All this stuff, Uni, Sushi, BAL, Curve, BNT, all correlating pretty much 1-to-1. ZRX, it's all the same. Hasn't mattered at all. There's no identity differentiation here on the price chart. If we look at 1inch, even on BSC, transactions, contract interactions rather, are down, users down. It could be just a product of the market, not necessarily 1inch, but doesn't give you a bullish sentiment for the token, certainly. I think at the very least you need volume. Like I said, here's Uni. This is per day, past 24 hours. Uni, 1inch, Sushi, ZRX, Curve. Now, it's not like Uni is doing that much better than any of these other tokens, which is maybe counterintuitive. And I wish it mattered. It would make trading this stuff a lot easier, but it hasn't. It's all correlated. So it's easy to say, well, 1inch has no volume, so it's bearish. But, it's not bullish when we do have 2.6 billion in a day in volume. Doesn't matter. And, we can go down the list as far as weekly volume here. For 1inch, most of this isn't visible the way they divide it, but it's pretty much just a blip on the radar when it comes to Uni or most other DEXs by comparison. If we look at the on-chain stats for 1inch, transaction counts basically flattened down. I guess you could argue they've 2x'd in the past couple months, but that certainly doesn't look incredibly bullish. Average transaction value is rising substantially, probably because ETH fees are incredibly high. If we look at NVT, NVT had been declining, now it's rising. NVT is just a measure of economic utility relative to market cap. Ideally, you want to see this falling if you're bullish, rising if you're bearish, overbought up here, oversold down here. But in general, this really hasn't mattered either. I mean, maybe what matters the most is transactions and active addresses, which are just flat. And you can use the exchange without using the token. So where's the use case for 1inch, right? That's the question I think a lot of people are asking for most of these DeFi tokens at this point. Where's the use case if there's no buy and burn, if there's no mandatory requirement to use the token? There's governance, and that's kind of it for a lot of these tokens. Here's MVRV versus price. MVRV is another metric of market cap versus on-chain activity. For most coins, this tops out at around a 2x multiple. For most of DeFi, this has been not very helpful at all. As you can see here, MVRV in the fill just continues to decline over time. Ideally, you see highs in MVRV match highs in price. Certainly Hasn't been the case. Probably just needs more data, 1 or 2 more years, and you should be able to see more clearly what's going on here. But thus far, none of this has really mattered. Kind of surprised me that the 1-inch Google Trends worldwide spiked here. Not really sure why. I guess this could have been the all-time high, or that it could have been that spike in price October 24th. Is that when it was? Yeah, I guess it was. I guess that was the all-time high. So anytime you see stuff like this, usually correlates with price, because there are people looking up searches for 1-inch. There are articles about it. Hit an all-time high. It's up 200% in a day. By that time, for most people, it's too late to get in. But the people who don't trade don't know that, so they buy, and then they get trounced in the coming days or weeks, unless there's some continuous hype. I think this was this Upbit listing? There's some exchange listing, I think, that was the reason, at least the proposed reason. Certainly not something incredibly bullish fundamentally that I was able to see. Flipping gears to technicals, we have the 5200 EMA on here, VPVR, volume RSI. This is on Binance on the daily. And previously, up until May, we were kind of held within this 350 to 650 range, roughly. After May, we were held below it. Briefly in October, November, we got back into that. And now again, we're below. So generally, you can just trade ranges as neutral in the range itself, bullish above, bearish below. That's kind of the baseline. And then obviously within the range, you can say we're bullish, or we're more likely to bounce here up, bounce here down, especially if this range is multi-month, multi-year, has a massive chart history. Certainly not the case here, but as far as DeFi goes, this is a lot of range chart history. So now we're actually in the range below that. We're in the 2 to 360 range with bearish trend metrics. You could argue a bull div here on volume and RSI, descending, falling wedge, something, right? Descending channel. I think the issue for me with a lot of DeFi here is the fundamentals are so terrible. ETH fees are so high, and none of the stuff that matters. So what do we look at? We look at technicals, which this thing has just ranged since February. For being honest, it hasn't really had an incredible run other than the initial release. This isn't some multi-week bull trend or anything we're talking about here. So the expectation, the trend is your friend until the end. The trend has been range. So the expectation should be range. Now you can buy the lows and sell the highs in either of these ranges. I think that's perfectly reasonable. But if trend metrics are bearish, even within a range, I certainly expect lower lows over higher highs. So yeah, all of DeFi could mean revert. You could go long on that. For instance, you'd go long here, stop loss below these wicks, target of the range high around 380. I think that's a fine trade. It's not necessarily for me, but it's a fine trade. Looking at the daily cloud, you see a massive TK disequilibrium here as this sold off incredibly quickly. So if this does pop up, the cloud likes something around 5, which would basically be back into the upper range. Look at the 4-hour cloud though. I don't like entries on anything until something on the low time frames is at least telling me, yeah, this looks okay now. And we're still below the 4-hour cloud. We're not really above it until 310, and that'll come down slowly over time as it did in November, December. But we need a spark. We need something, some catalyst, at least on technicals, to tell me that, yeah, this looks good again. Because this just looks like a giant pump and dump to me. Giant exit pump. It retraced all of the Q4 gains, anything it did in October, completely retraced. Against BTC, it's making multi-month lows. Certainly not a good look. I don't really buy multi-month lows, but again, it's up to your risk profile. It's up to what you consider acceptable. But if it's not going to beat BTC, if it's not going to beat ETH, what's the point? If we're being honest here. Maybe you're a multi-year 1-inch community member. That's fine. But as a trader, at some point, you have to be objective about this. And yes, this can mean revert. It doesn't mean it's bullish. Ultimately, I would want this back above 7,000 sats to be bullish again. You could argue triple bottom potential here. The previous triple bottom inverted head and shoulders failed spectacularly. This really has not done well ever since January, and that's kind of been it. It had its initial surge, and now it's just giant distribution against BTC. Same thing with ETH, continues to make all-time lows against ETH. You could argue bull div, I guess, maybe. You could argue mean reversion potential. Certainly not a terrible trade. Back to the mean, back to this range. And all this stuff is theoretically longable with stops below the current lows. That's always a safe bet. If you really want to make a trade, that trade is always on the table. But my argument against that is the trend is not on your side here. So it's kind of setting up expectations of failure, at least for me. So hey, I hope I'm wrong. I hope this stuff starts to matter. I hope fundamentals start to matter a little bit. You think as the biggest aggregator, as the biggest multi-chain aggregator, that 1inch would be doing better token price-wise, but certainly not the case. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.